I'm a director of a nonprofit called the Profitability Center of Excellence. It's a free membership if people want to write down that website and join. A lot of good educational content there. People ask me, how large do you need to be to basically benefit from some of the FP&A and enterprise and corporate performance management methods? They're all synonymous. My answer immediately is 25 employees. This does not need to be, like a multi-division large company with many divisions and hundreds and thousands of employees. When you have 25, these methods still apply. And let me just give a couple of examples. Let's talk about product and service line profitability reporting. Most companies have had such a proliferation of different variations, types of products and services, it creates complexity, which causes more overhead. And it's not unusual for the indirect expense, that's the overhead, to be 50% compared to the direct. So that's a substantial amount of money to be calculated for product cost. But the controllers and the CFOs and the accountants, they get lazy and we take the simple way we call it spreading the butter across bread. They allocate all of that overhead indirect expense on labor, number of labor hours, number of units produced, number of employees in a cost center, all of that. They really need to be using activity-based costing, which is a preferred way. So even with 25 employees, you could benefit. And I'm going to go longer here. Another one of the methods in FP&A is the strategy map and the balanced scorecard. And if people are not familiar with it, just go Google it, balanced scorecard. And the issue there is most managers and employees don't understand the executive team strategy. And what the executives have realized to an effective way to communicate the strategy is with the strategy map and the feedback mechanism, the balanced scorecard, and then get your key performance indicators with targets so that you can create feedback and accountability for and align the behavior of the employees with the formulated strategy of the executives. So Roger, I know I went real long there, but those are two examples that even with 25 employees, you can benefit from FP&A. I think the COVID pandemic provided some lessons learned that now can benefit today, which I think is where you're going. And one of the real interests during COVID was from board of directors who were concerned that the companies that they had governance responsibility might go out of business. And so they were really interested in net cash flow. I mean, in the end, ultimately money is king. And so what that led to was progressive ways of doing not just budgeting, but evolving the budget and rolling financial forecasts, but doing it the proper way. And it really involves capacity management. This is a little of my, industrial engineering from Cornell University. You really needed to measure or determine how many employees and what types of employees do we need to meet the sales demand and their salary and wage level, and then other expenses with suppliers and so forth. And that led to really driver-based rolling financial forecasts. And of course, it gets a little tricky to do it the right way. You got to have unit level consumption rates, which are derived from activity-based costing. And, it's a standard formula, sales volume and mix times unit level consumption rates equals the capacity required, which we monetize, euros, dollars, what have you. So long answer to your brief question, the lesson learned for board of directors and executives and actually managers is we really need to go beyond the fiscal end of the year and not use these primitive budgeting techniques with spreadsheets and ledger expenses, rubber bands and paper clips, but to use modeling techniques. Costing is modeling. It's not T accounts and journal entries. You're modeling the relationship of the consumption of expenses through the end-to-end processes and the activities that belong them. They get traced and assigned to products, services, channels, customers with a cause and effect relationship. For my book is John Wiley and Sons Publishing. The website is www.wiley.com. If you go to the website and just enter my name, you'll see all of my books. The one I recommend is called Performance Management, integrating strategy execution, analytics, risk management, and so forth. It's a pretty good, it's like an MBA in one read because it covers so many items. That would be my favorite book that I recommend. If they want to do activity-based costing, there's a second book in there called Activity-Based Cost Management and Executive Guide, and that's pretty good, a good manual how to implement activity-based costing.